Do you know why some people get higher interest rates on mortgages than others? Do you know when in the buying process you get locked into an interest rate on a mortgage? Have you heard about the unprecedented interest rates that we've seen on mortgages lately? If you've ever even slightly considered buying a home, you need to watch my conversation with Kellie Allen, who is a loan officer and the branch manager of SynergyOne Lending. You'll walk away with a way better understanding of what buying a home looks like from the financing side. And if you stick around to the end, you'll hear some incredible numbers that show how low the interest rates have dropped over the past several weeks. We're starting right now. Okay, hello everybody. Welcome back to my YouTube channel. I'm Benj Foreman. I'm a realtor here in Boise. And today I'm really excited to have Kellie Allen with me to talk about some things relating to the lending side of real estate. Hi, Kellie. Let me give you just a minute or two to introduce yourself and maybe tell us a bit about who you are and kind of what you do here.
Great. Well, I'm a mortgage loan officer. I'm with a company called SynergyOne Lending. Been in the business about 28 years. We are a full-service residential mortgage lender, so we do residential mortgages, which is 1 to 4 units, and we do everything conforming, so conventional, FHA, VA, Idaho housing, all of the hot programs. So yeah, that's what we do.
Let's just jump right into it, I guess. Let's say somebody wants to buy a home. What does the process look like? So I have a client, I send them over to you. What does the application process look like, and how do you determine how much somebody gets pre-approved for?
Sure. Well, now, especially during COVID, we're doing a lot of online applications. And even pre-COVID, that's probably about how 80% of people today apply for a mortgage is online. Typically, though, before that, there'll be an introduction, obviously, from the referring person, usually yourself, whether it's through email or a phone call or whatever. And people hop online, do an online application. That kicks it over to me. We pull credit, and then we start to talk about what their goals are. How much they want to put down, is this a owner occupied purchase? Is this an investment property? What are they doing with the home? And then we fit them into a program that, meets those needs. Now, we do require some documentation, obviously, and it's usually fairly easy. Things like pay stubs, W-2s, bank statements, all of that can be uploaded directly to their online app. With today's technology, it's made things a lot easier. In pre-COVID days, of course, with first-time home buyers and stuff, it's great to get together. So sometimes it's a matter of setting up an appointment, having them come in so we can talk face-to-face about, just the different loan types and kind of make sure they have a really clear understanding of what a down payment is versus closing costs and that kind of thing. Right. So it's easy online. It's great in person. It can be done either way.
What's the difference between being pre-qualified for a loan and being pre-approved for a loan?
So pre-qualification means basically we've talked on the phone or we've gotten an application, and based on what you put down or what you've told me, this is how much you qualify for. So if you say you make X number of dollars a month and I pull your credit and you have this much debt, I can say you are pre-qualified for this much of a mortgage. Okay. Pre-approved takes it one step further and says, you've supplied me all the documentation I need to verify your income and your assets. And then that means you're actually fully pre-approved. It's an important distinction because if you're an agent and you're taking offers and you get a pre-qual letter versus a pre-approval letter, the pre-qual letter really is only as good as, the person giving the information. The pre-approval says, yes, I've verified all that information and it's accurate and they're fully pre-approved. So you always want to get pre-approved to have the strongest offer letter.
Right. And if you get pre-approved, is that a guarantee that you can get the loan, or what's the percentage? Are you 80% sure to get the loan or 100% sure?
Yeah, again, that kind of depends on how good the person is issuing the pre-approval letter. But in general, it's probably, I'm going to say 90% of the time, very, very secure. The only offsetting factor would be is if anything materially changes, right? If somebody loses their job, if somebody's income changes, if they went out and bought a new boat and didn't tell you, or any of their liabilities change, something like that, that would invalidate the pre-approval letter because it wouldn't be based on the same information. Right. As long as somebody has given you the information, it stays the same from where it was at pre-approval through the closing time, then yes, that pre-approval letter is strong.
So another kind of related question, how do you determine what interest rate somebody gets? So let's say,
Yeah, that's a great question.
does everybody get the same interest rate, or does it depend on your sort of loan to value? Talk about that maybe for a minute.
Well, and that's probably the biggest question I get, right? Is what are rates doing, or what are interest rates at? Well, interest rates are at a range in most cases, right? Because everybody does not get the same interest rate. Your interest rate's determined on your credit score and your loan to value, and then the type of loan you're getting. So if you're doing an owner-occupied loan and you have 20% down and you have a 740 credit score, you're going to get a different rate than if you're doing an investment property loan with 20% down and a lower credit score, right? So it's very important that you talk to a lender that's specific for your situation, so you get quoted a rate. Now, that just because you're quoted a rate too doesn't mean you're locked in at that rate. So let's say today we get somebody pre-approved and you're taking them out this weekend to go shopping. Well, I'm going to quote them today's rate, but by the time they're under contract and ready to lock, it could be a different interest rate.
So you're actually you're only locked in the day that you sign the contract?
You're only locked in the day that you and I talk about locking in, okay? But you can only lock in once you're under contract and have a closing date. And the reason for that is because we're locking you for a period of time, right? So if I locked you without a property today for 30 days and you didn't find a property in 30 days, well, that lock wouldn't be any good. So once we're under contract and we have a closing date, and let's say that closing date's 60 days out, well, we can lock any time between now and then, or we can wait, we can float a little bit till we get within that 30-day time period. Locks are in increments of 15-day, 30-day, 45-day, 60-day. So the shorter the term of the lock, the less it costs you, right? Because it's a cost of money. So the less time we need to have that rate secured, the better the cost is to get that rate. But we certainly don't want to lock somebody for a 15-day rate and then they close on day 20. Well, we've blown our lock. And you never want to blow a lock, because when you do that, you get what's called worst case pricing, right? If rates are up, you get the higher rate. If rates are the same or lower, you get the same rate you locked at. So you always want to make sure that you really time that lock accordingly to your closing date. And so that's a conversation we have throughout the loan process, and we talk about when to lock.
Okay, so you have the person's income that factors into what rate, what interest rate that they would get. The down payment, that's a factor. So if somebody's putting 10% down versus 50% down, is there a big difference between the interest rate?
There can be. Yeah, sure. Especially when you're talking about that big of a difference, 50% versus 10%. Yeah, there certainly can be. If you're talking about the difference between 5% and 10%, you're not going to get hit for that loan to value necessarily. But the lower the loan to value, I mean, think about it from the bank's perspective, the lower the risk on the loan, the better the rate could be.
Right. And so does the term of the loan factor into that as well? So a 15-year loan would have a higher rate versus a 30-year loan?
Actually, a 15-year rate has a lower rate, vice versa. Yeah, 15-year loan is going to have a lower rate than a 20-year loan than a 30-year loan. And that's sometimes people don't understand that we do 20-year loan rates as well. 20 years not used as commonly as the 30-year. Most people take a 30-year loan. And that's usually the safest and best way to go, simply because with fluctuations in jobs and income and whatever, you can always pay extra on your loan. So if you want to pay that loan off in 15 years, I can tell you how much extra to pay to do that. But it's sometimes safer to take the 30-year loan, pay extra, versus me giving you a 15-year loan and you have to make that higher payment, right? And then, oh shoot, there's a job change, there's an employment income change, there's a dishwasher that breaks or whatever, there's a cash flow issue.
There's a virus that breaks out. Okay, one other question on sort of the interest rates. How do you buy down the interest rate? So, let's say you can give me 3.75%, but I want to see it at 3.5%. What goes into that?
Yeah, so what happens is every day when we get a rate sheet, we have a rate with a corresponding cost. And so that's what you're talking about. So let's say hypothetically 3.75 was at no cost. So I would quote you today, the rate is at 3.75 for your particular situation. And you said, okay, great, but I really want to buy the rate down to 3.5. Well, I would tell you, based off my rate sheet, what that discount point cost would be to buy that rate down. Okay, It might be a point, it might be a point and a quarter, it might be a half a point, it could be a quarter point, it could be anywhere in between. But the cost of the rate to buy it down changes every day, just like the interest rates change every day. Okay?
Mhm.
So what we do is an analysis based on how long you're going to be in the home. The longer you're going to be in the home, the more sense it makes to potentially buy that rate down, assuming you have the funds to do so. And the shorter the time you're going to be in the home, the less it makes sense to buy that rate down.
Right. And have you seen, just in this whole, COVID virus, COVID-19, what do you call it, pandemic, have you seen the rates like really fluctuate over the past month and a half?
We have initially, right prior to COVID, we were seeing really, really great interest rates, and then they kind of really plummeted, and we had a really couple of good days there where they were really low. And then, of course, COVID breaks out, and things kind of bumped back up and leveled off. But we're in the middle of an incredible rate environment right now.
Yeah.
Even with that, and even with the volatility we've seen due to the stock market and the bond market and the unemployment figures and all of that stuff, even with all of that going on, interest rates are historically low, and really at a place where it just doesn't make sense for somebody to not do something at this point if you're in the market for buying. I mean, I don't know that it's going to get any better than they are today.
That's interesting. What's the lowest rate? Can you tell me? What's the lowest rate that you've locked somebody in for in the past 2 months?
Well, on a 15-year, we got down to like 2.75%, which
That's amazing.
yeah, but I've actually, even at that kind of lowest days, I think we got somebody at 2.99 on a 30-year fixed rate loan.
Wow.
I mean, when you're talking 2% on long-term money, that's incredible. I always say it's almost free, right? So yeah, really,
And
really
have you
good
ever
rate.
seen it this low, or is this like new for you?
Not really. No, this has been the lowest I've seen, I think, in my career.
Thanks for watching. If you haven't already done so, be sure to hit the subscribe button and click on the notification bell so you know when my next video comes out. And you're not going to want to miss the next one, because in the next video I talk about how to buy one of these, a manufactured home. Yes, the rules for financing these are different, and I talk about this in the next one.